Ladies and gentlemen, good day and welcome to HEC Infra Projects Limited Q1 FY26 Results Earnings Conference Call hosted by Kiran Advisors Private Limited. As a reminder, all participants' line will be in listen-only mode. There will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference has been recorded. I now hand over the conference to Mr. Ganesh from Kiran Advisors. Thank you, and over to you, sir.
Thank you, and good afternoon, everyone. I welcome you all to the conference call of HEC Infra Projects Limited. From the management team, we have Mr. Rahul Shah, Full-Time Director of the company. With that, now I hand over the call to Mr. Rahul Shah for the opening remarks. Over to you, sir. Thank you.
Thank you, Ganesh sir, and good afternoon, everyone. It is a pleasure to welcome you all to the Q1 earnings conference call of HEC Infra Projects Limited. We are excited to share our performance and outlook with our valued stakeholders. HEC Infra Projects, based in Ahmedabad, has established itself as a leading turnkey EPC contractor since its inception in 2005. Over the past 2 decades, we have evolved into a prominent player in India's infrastructure landscape, particularly known for our deep expertise in extra high voltage, EHV transmission and distribution. At the core of our operations is an integrated business model that spans engineering, design, supply chain management, installation, testing, and commissioning. This end-to-end service delivery enables us to maintain high standards of quality, safety, and execution excellence. Our expertise encompasses a diverse set of infrastructure domains ranging from overhead and underground transmission lines, power distribution substations, and industrial electrification to water pumping stations, treatment plants, solar parks, and advanced lighting and ELV systems. Till date, we have successfully executed over 300 projects across the country. Some of our most notable achievements include the 220 kV substation for JETCO at Kawat, a high-capacity water pumping station for GWIL in Khateda, extensive EHV cable laying for JETCO, and the designing and construction of 132 kV transmission lines, including hot line work for HVPNL. We also take pride in our integrated infrastructure work for the new OPD complex at Delhi AIIMS, which covered critical systems such as power distribution, BMS, elevators, escalators, security systems, and automated parking facilities. These milestone projects underscore our capability to manage complex and large-scale assignments. Over the years, we have built a strong and diversified client base comprising of 50 esteemed public and private organizations, including JETCO, HVPNL, Tata Power Solar, Bharat Forge, Alstom, MG Motors, and several municipal corporations. This balance between government and private sector work highlights our key role in supporting India's infrastructure growth. During the first quarter of FY26, we secured 7 significant new orders worth 55.77 crores. First, from Brixo Industries, valued at 15.68 crores for EPC electrical works related to plant electrification and 66 kV line shifting. Second, from MS Blue Pine Energy Limited, valued at 9.62 crores for a fast-track EPC project involving the supply, installation, testing and commissioning of a 66 kV double-circuit transmission line along with 12 kilometers of underground cable. Third, from Narmada Water Resources, Water Supply and Culture Department, valued at 3.03 crores for providing and installing a CCTV surveillance system, fire safety arrangements, access control, and communication systems at Ukai Dam. Fourth, from EPI Engineering Projects India Limited, valued at 13.78 crores for the design, engineering, supply, erection, testing, and commissioning of a transformer bay extension for an existing 220 kV switchyard. Fifth, from Ahmedabad Municipal Corporation, valued at 5.9 crores for the supply, installation, testing and commissioning of street lighting poles and related electrical works across various locations. Sixth, from Ahmedabad Municipal Corporation, valued at 4.68 crores for the augmentation of civil, electrical, mechanical, and instrumentation works at the CTM water distribution station. Seventh, from AMC, again, Ahmedabad Municipal Corporation, valued at 3.08 crores for the supply, installation, testing, and commissioning of electrical, mechanical, and instrumentation systems at Geetabad and Niyojnagar water distribution stations. Now let me walk you through our financial performance. For the Q1 FY26, we reported total income of 27.91 crores, marking a robust year-on-year growth of 52.91%. EBITDA of 2.61 crores, up by 80.97%. EBITDA margin at 9.35%, a year-on-year expansion of 145 points. Net profit stood at 1.33 crores, reflecting a year-on-year growth of 59.37%. Net profit margin improved to 4.77%, up by 19 basis points year-on-year. EPS for the quarter was 1.23, an increase of 50%. With 7 new project wins with over 55 crores in this quarter, we have further strengthened our order pipeline. Our strong client relationship and proven execution capabilities continue to drive repeat business and new opportunities, positioning us well for sustained growth in the coming quarters. Looking ahead, we are focused on several strategic initiatives: selective acquisitions of low voltage and medium voltage transformer manufacturers to enhance our backward integration, optimize costs, and improve margins; prioritizing short tenure, high return EPC projects, especially those with execution cycles of 6 to 12 months, and industry-leading IRRs to accelerate cash conversion and improve profitability; expanding our core transmission and distribution footprint by leveraging upcoming RDSS and grid modernization tenders; scaling our water infrastructure capabilities to capture the increasing municipal and industrial demand for large-scale water treatment and pumping solutions; aligning with national electrification initiatives by actively bidding for projects under PM KUSUM, the Green Hydrogen Mission, and other state and central programs aimed at grid modernization and sustainability; exploring BESS, Battery Energy Storage System tenders to support India's transition to round-the-clock renewable power through both BOOT and EPC models. We believe that our integrated capabilities, proven project execution, and strong relationships with both government and private clients place us in a unique position to continue supporting India's infrastructure transformation. Before we open the floor for questions, I would like to take a moment to sincerely thank the entire HEC Infra Projects team for their unwavering dedication and hard work. We also extend our gratitude to our valued clients, partners, investors, and stakeholders whose continued trust and support drive us to aim higher and deliver consistently. With that, I now open the floor to your questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kushal Kashliwal from InVed Research. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir. Sir, I was just looking at your company recently, and it seems like you are working in various subsectors within the overall EPC, within the overall EPC space. So any particular sectors, maybe top 1 or top 2 sectors where you have like a prime importance or prime focus, and maybe you think that the growth will be higher in those subsectors within the entire, I think, 5-6 subsectors you cover. So which one is the most important for you for the next, let's say, 3 to 5 years?
So currently, even with all the government initiatives coming in, I think majorly all majority of our work is being focused towards transmission and distribution sector, and a certain portion to the water pumping and water treatment side as well. So these two are the major sectors that we are currently focusing on. And we are also exploring new types of projects as new projects are upcoming in the market, specifically relating to battery energy storage systems. So these projects are also like a work in progress for us. And I think majority of our revenue for the next, I think 1 or 2 years will be coming from these particular sectors only. It might be, and most of it will be EPC only, right? And we are exploring for encompassing our vision to boot models as well. But let's see. I mean, we are not very sure about the boot model as it is a very capital intensive industry, but EPC we are currently working for the same.
Understood, sir. Fair enough. Sir, out of the total, transmission and distribution, which are the states where we work for distribution? Are we only present in Gujarat in distribution? And in transmission, how many states are we present apart from Gujarat?
Majority of our transmission lines are currently in Haryana, and I think Gujarat also is in a way the largest state in terms of the overall revenue. But Haryana is another state where we have equally prioritized it in the past, since the last 3 years. So major presence is in Gujarat and Haryana. Time to time, and based on the type of opportunity presented, we have also explored working in Jharkhand, in Delhi, Maharashtra, and Rajasthan in our previous years. So at present, we are currently working in these 2 states as on if we speak about this particular quarter. But otherwise, yes, we have already explored a couple more states where we are keen to take in more projects as well.
Okay, and eventually we want to become like a multi-state or a pan-India kind of operator, or do we want to only restrict mainly to Gujarat because in Gujarat there is a large distribution capex which the government is doing? So let's say 3 to 5 years.
The industry that we are in, it is not an industry where sticking to one particular state or one particular location is going to be beneficial for us. Yes, there is a lot of development coming to Gujarat in terms of industry and in terms of government projects as well. But that does not mean that other states are not up for play, because in other states we do find better terms and conditions in terms of payments and in terms of less competition as well. So going to other states is technically a betterment for us in all other perspectives as well.
But sir, in other states we'll be primarily in transmission because distribution is like a very local geographic know-how, you need to know. So other state expansion will be mainly in transmission and not in distribution. Is that a correct understanding?
No. So it will be in both transmission and distribution as well. So currently, I think, in fact, it will be much more focused in distribution first. By distribution, I mean power substations. I do not mean, let's say, grid improvement projects or maybe some localized tenders which focus on a particular area development like you mentioned. But we are focused majorly in substations and transmission lines for outer states.
Understood. So mainly in substations is what we are looking at. Okay.
Yes.
Distribution substations.
So see, we are bidding currently for building projects as well. It is not that we are not bidding for our other 4 verticals. But currently these 4 verticals these 2 verticals that we are focused on, transmission, distribution and water pumping, we are seeing that there is a lot more opportunity than there was before. And because of this, there is a shortfall of contractors or shortfall of good EPC vendors in these sectors particularly. So looking to that, I think we can easily tap into these markets at good premiums. And that is basically the goal and the current strategy for at least this quarter and maybe the coming quarters as well.
Okay, understood. Sir, my next question was on our current non-fund based limits and working capital. Is it possible to give out, who are our lenders, bankers, and what interest rates do we enjoy in our working capital as well as our bonds?
So see, all of this data is available publicly on our website as well. But since you have asked it, I'll just give you a short brief answer for these as well. Our prime banker is Bank of India, and we are enjoying a limit of approximately a total limit of 44 crores, of which 17 crores is cash limit, and the remaining is non-fund based limit. Right. So 27 crores of non-fund based limit and 17 crores of fund-based limit is what we are enjoying with our prime banker. The interest rate is at 9.15% for our cash limits, and the remainder margins are at 1% for bank. Sorry, at 0.75% for bank guarantee on an annual.
Understood.
Right. Yes.
Understood. And with this working capital and non-fund based limit, what is kind of order book which we can bid for? What is our peak, order book which we can have at these current levels of working capital and non-fund based limits?
I think the targeted turnover for this year, looking to these current limits, somewhere around 160 to 175 crores is what we are looking at, as in the top line total revenue. And in terms of like, we are also applying for enhancements with Bank of India for this year as well, as we will be under review as well. So that probably review is going to happen in the second quarter, and most probably we are hopeful that with any new enhancements that come along the way, these targets will also fairly improve.
So in terms of order book, what can be an order book which can be expected out of the current and maybe some additional working capital lines? Maybe if you can guide towards order book to which we expect or which we want to achieve in the next year or so.
See, it is very much dependent on what sort of enhancement the bank can grant to us. Of course, we are being very aggressive with the bank in terms of the negotiation that is currently happening. But to be honest with you, it depends a lot on what the bank, on what sort of comfort zone the bank has with us. I mean, we are banking with Bank of India since the last almost 14, 15 years. And so far we have a positive response from them. Looking to that, currently we have an order book of 220 to 230 crores, as in the unexecuted part of the order book. That is what I'm talking about. And we hope that by year end we have maybe 250 to 300 crores of unexecuted order book. So we'll be growing on this order book by completing this year's targets for revenues as well.
Got it. Thank you, sir. I'll come back in the queue. Thanks.
Yes, of course.
Thank you. The next question is from the line of Swapnil Kabra from SK Enterprises. Please go ahead.
Hi, sir. Am I audible?
Hello, sir. Hello.
Yeah, sir. So my question was on the margin front. So is it fair to assume that with every passing quarter, as our revenues increase on quarterly basis, we would be witnessing better margins compared to Q1?
See, I'll be very honest with you. I think a similar question was asked to me in a previous earnings call, and the question is very fair. But just to give you a brief understanding is that I would say that I would suggest our investors to look at the returns on an annual basis or the profitability on an annual basis rather than focusing on a quarter-to-quarter basis, because let's say when the quarter ends, maybe our purchase might be on the higher side compared to our sales. So that is why majority of it is settled out at the end of the year. So the better way to put it would be that on an annual basis, I'm surely not in the right, I do not have the right data to comment on a quarterly basis. But what I can say is that our annual EBITDA and PAT will probably improve this year as well, as we have had drastic improvements in our working capital cycles and as in the working limits. Like in the previous question, I was asked about the bank guarantees and the cost of what finance we are operating at. So we have had a significant improvement in those in the past year, and we are hoping for further improvement as RBI has also cut rates. So I think all of these positive factors will add on. And on top of that, since we are focusing solely on two sectors, I think the profitability is going to go up from the procurement side as well. So you will be for surely seeing better results on an annual basis.
Right. So any aspiration do we have with respect to the sales for this year and the next year?
As to see on a conservative side, like I said, let's say if we don't get any enhancement from the bank, like I said, so we are targeting somewhere around 175 crores of revenue this year. But if we are aggressive about it, and if the bank, like I said, they are currently positive about it, but it's about probably in the next quarter, I think it will be very much clear as to what targets we'll be pursuing as to what enhancement the bank gives us. But this is on a very conservative side, given that none of our limits are being enhanced.
Okay.
Right? Yes.
Okay. Thank you, sir. I'll join the queue. Okay.
Yes, sure.
Thank you. The next question is from the line of Rohit, an individual investor. Please go ahead.
Hi, am I audible?
Yes, sir, you are audible.
Congratulations on a great set of numbers, sir. So my question is related to the previous participant only on the margins. The last quarter Concall, you gave a guidance of 12 to 13% we'll be able to maintain. So it's still intact?
Yes, it will be. Yes, it is within that, and I would say that, like I said, I would suggest investors to look on an annual basis rather than going on a quarter-to-quarter basis, as most of our projects have a cycle of around averaging around 15 months is what the average cycle would be currently, right? So at a certain point of the project, maybe the profitability might not show up, and maybe in some projects we have booked in the profit as well. So it depends on the situation, and currently we are not tracking it on that level, which I was very, I think, clear about. So on what you said as to on an annual basis, yes, we are on track, is how I would like to at least justify your question.
Okay. Thank you.
Thank you. Before we take the next question, we would like to remind participants you may press star and 1 to ask a question. The next question is from the line of Abhishek Sharma, an individual investor. Please go ahead.
Yeah. Hello, sir. Am I audible?
Yes, sir, you are audible,
Yes,
sir.
audible.
So my question is, how do you see the water infrastructure vertical scaling given the government push under Jal Jeevan Mission?
So currently under the Jal Jeevan Mission, I think there are huge projects going around. But if you look at what we are working under, we are not working in the Jal Jeevan Mission. The Jal Jeevan Mission is particularly focused in rural and semi-urban areas where the main target of the mission is to basically just get water to doorsteps of households which have not seen water as in from the government side. I think there is no direct supply line. So it is about creating a new supply line. So we are not focused in that particular area, but the government is currently very aggressive on it, as the government is prioritizing the basic necessities above everything else. So there are two things that majorly come into this story. One is getting water to households in a timely manner, and the second is getting electricity, and maybe getting 24/7 electricity. So that is the current target of the government, and looking to this, I think we have a lot to work upon as a nation. So I think you will be seeing that one of the largest growing sectors in the next 2 to 3 years, at least for the next 2 to 3 years, are going to be these two sectors, is how we see these current programs and missions as.
Okay. And are you looking at partnership or joint ventures for battery energy storage system tenders?
So we are currently scoping for BESS tenders in terms of we are looking for, we are currently searching for the whole project only in a way where currently we are building up a project report as to what profitability and what IRRs will be there for the project. This is on the perspective of us scoping the project as a BOOT model, as in we will be the owners of the utility at the end of the day. In terms of EPC, we have already floated multiple quotations to different vendors who are currently in need of basically executing their current best projects that they have taken under various government schemes. So as EPC players, we are very active in this space, but as a BOOT model operator, we are currently in work. It is in progress. It is basically under review as to if we want to get into this line or not.
Okay. And sir, you are exploring backward integration into transformer manufacturing. How close are you to finalizing an acquisition?
No, so we are not just looking into the transformer division. We are looking into multiple various products that are being used in our projects. And transformers, yes, of course, because it becomes an integral part of our service. But the type of transformers that we are currently targeting is for government supply. Technically, it would be a backward integration, but the type of transformer that we would be that currently we are scoping is not of the scale of the project that we are doing it. I mean, we are basically doing projects for extra high voltage lines. So anything above 66 kV and above is what we are working. But the transformer manufacturing plan that we are currently working under is basically lesser than that. It is under the mid voltage segment, somewhere around 33 kV and 11 kV. So technically it would not be a backward integration, but then the plan is ultimately to scale it up to that level. So we are not, in terms of timeline, I would say that we are still in the scoping stage where we are just checking out the feasibility. So we have been checking this feasibility out since last almost, I think it's more than 4 to 5 months now that we are scoping this out. I think by the next quarter we will be having a verdict as to whether we'll be exploring or expanding into that domain or not.
Okay. And last question is, how would this integration impact your cost structure and bidding competitiveness?
So I would say it will not change on that aspect, as whatever we start will have certain margins in that line as well. So we are not going to ultimately, it is not going to be in backward integration to drive profits. But looking to today's scenario, it is more about getting the deliveries done in time. Today we have certain components where the timeline for these components have gone more than 12 months, particularly circuit breakers and certain types of insulators. So porcelain insulators, any components that you want to buy, it takes more than 12 months currently for high voltage projects, or maybe even in some cases somewhere around 14 to 16 months as well. So if we can basically cater to some of these demands as well, then we are thinking it along those lines where people are basically willing to pay a certain premium for expedited deliveries in these components. So it's not just transformers, like I said, we are scoping certain components and items to look into for manufacturing. But in regards to transformers, I think you will have a verdict in the next quarter as to, we will have a detailed feasibility report ready by then.
Okay, sir.
Right.
Okay, sir. Thank you, sir.
Yes. Okay. Thank you.
Thank you. The next question is from the line of Vinod Shah from an individual investor. Please go ahead.
Yeah. Hi. Good afternoon, sir.
Good afternoon, sir.
Yes. So our revenue grew 53% this quarter. So is this sustainable for the rest of the FY 26?
So like I said, I would say that it is not going to be like that all 4 quarters you will see this revenue. And I'll be very honest about it in the sense where you should look at it at what maybe PAT we achieved last year, what EBITDA we had last year. And you can assume that we will be following those trends on an annual basis, is how I would say that this will probably pan out at the end of the year. So I strongly suggest all our investors to basically look at it on an annual perspective, not look at it on a quarterly basis. As this quarter, maybe we had a very good quarter in terms of, let's say, maybe profitability, where compared to last year, we had maybe 50% increased profits. But I would say that I would in fact urge all investors to look at it on an annual basis and what projection we can give you is that on an annual basis, there will be improvements from the last year, is what I would say. So, in terms of maintaining profitability on an annual basis, yes, it is possible, and it is much clearly visible to us that better margins than last year would be achieved this year as well.
Okay, sir. Sir, and our current order book is like 326 crore, right?
So, there is a distinction I would like to point out. 326 crores is the order book, but we have 220 crores of unexecuted order book. So whenever, let's say, you scope out any EPC company and you talk about order book, there are two components to the order book. One is the executed part and one is the unexecuted part. So total order book defines the total order value of all the projects that the company has, while the unexecuted part only refers to the unexecuted portion. So currently we have somewhere around 220 to 230 crores of unexecuted order book.
Okay, sir. Which vertical of this order book would be drive the execution in next, like, let's just say 2 or 3 quarters?
Yes. So I think transmission and distribution will be the prime agenda for us, and would also point out to any growth that will be happening in this company in this particular 2 to 3. So basically this FY, I think we are much focused on transmission and distribution. We're also focused on water pumping projects also, but not to the tune as to what T&D would probably is being focused in right now.
Okay, sir. Sir, and you had mentioned that we are focusing on short tenure projects and high return projects. So how does it change our project mix compared to the last year?
So, I think we are taking projects where much more aggressiveness is required from a contractor standpoint, as in, let's say we have a project with Blue Pine Energy. So, for them, it is very critical for them to basically execute this project within a timeline of the next somewhere between 5 months or is the deadline for them. So we have taken up this project with them with a deadline of 6 months, while more than approximately 30 to 40% of the project has been completed in the first month itself. So we are being aggressive in terms of project selection, where end client requirement is very important. So this is on the private side. And like I said, private to government ratio for the currently order book we have is approximately 50-50%. So 50% of our order book is very aggressive in terms of execution. And the other 50% is government projects, where of course there is a requirement for finishing the project in time, but the timelines are larger and certain delays are expected particularly in transmission lines. So currently that is how the order book is, but majority of the projects that we currently have are from private, as to particularly this quarter discussion, if we talk about this quarter.
Okay. And so what is the competitive advantage that is helping us get the repeat orders?
So I would say that the only advantage in this market is that when let's say we are working with Blue Pine for the first time. So I think first impression matters the most, and most of our clientele, I'm like very proud to say that at least for all of our private clients, I don't think we have heard any complaints. From government side, of course, complaints are there, but delays are there from their end as well. So it is very imperative of our managers to basically complete projects in deadlines. I think if we do that, I don't think any other type of marketing as such is required if we focus on our work itself. Other advantages, I don't know, as an EPC player, that we have over others, because let's say that in terms of finance and in terms of other perspectives, I think there are companies who are doing better than us. But I would say that compared to the core work that we are doing, I think we have good teams with us and we are focused on team building for the next probably 1 or 2 years as well. So that is, I think, the edge that we will be having over others.
Okay, so that's all from my side. Thank you so much.
Okay, thank you.
Thank you. The next question is from the line of Shubham Gupta, an individual investor. Please go ahead.
Hello, am I audible?
Yes, sir, you are audible.
Audible.
Okay. So, sir, I wanted to ask, have you also explored the transformers? Because in the last con call, you told that you are exploring some transformer companies to buy them. So, are
So
you
there were
exploring
two
them?
alternatives that we were exploring at that point. One was maybe purchasing a company which is maybe ready for maybe a sale, or and the second was basically building one of our own and starting a new company altogether. So, like I said, like by the next quarter end, I think we'll be having an imperative result from our end, where if we are going to continue on this line of expansion of transformers will be clear or not. Currently, it is in the scope of, we are basically getting a feasibility report developed as to see what sort of returns and what sort of investment is being required in these lines.
Okay.
Right. So by next quarter, you'll have that, by the next semi-annual report, you'll have that verdict with that. So just to brief a little more on that, it is not just transformers. We are currently exploring a lot more products as well, because like I said, majority of the products that we are dealing with have like long lead products have like the timeline for those have increased drastically, and there is a huge demand in the market for these products. And renewable energy, in particularly in that sector, people have some crazy, insane requirements which are not being able to fulfilled by the vendors, and because of this, the price of these products has increased by almost 150% in the last year. So we are looking at such products where, so we are looking and exploring multiple different products where something can be done to maybe tap the market in these areas.
Got it, sir. And sir, one more question, like in BESS, what is your order bid pipeline right now? Like how much orders have you bid, and how much you are expecting to be converted for EPC specifically?
So basically, if we talk about battery BESS projects, we have secured one order from basically Hec Infra, who are basically working for a BESS of IndiGrid, and we are basically going to do a substation for them. The AC side evacuation for the BESS part for them. So that is one order that we have in hand, and I think few more others are probably on the way. We are having healthy discussions in this sector as well. So as this is as EPC contractors, okay. This is not as a boot model that we have in project. We have secured one project as an EPC contractor, and we are hoping to get more in the future as well.
Okay, sir. Got it. Thank you.
Okay. Thank you.
Thank you.
Thank you. A reminder to participants, if you wish to ask a question, you may press star and 1. The next question is from the line of Priya Jain from Green Capital. Please go ahead.
Hello. Am I audible?
Yes, you're audible.
I have a few questions with me. Firstly, what I can see that there are 27 projects currently under execution. So, do you think there will be any hindrance in executing at correct timelines, the given timelines?
No, I don't think there are any such challenges to any of our projects. Like I said, in government projects, of course, the timeline does shoot up, but then there are valid, justifiable reasons. So, let's say in government projects that we are currently working in, so land allotment may be in initial phase, and certain other challenges are always there. And these are not from our end, these are from the government side. So, like I said, 50% of our order book is private projects. So on that end, I don't see any delays happening in the project timeline. In the remainder 50%, we expect certain delays from all government projects. And we basically plan our order book in that fashion as well. As to if we have booked a government project, we don't go all in for these projects because they do attract a certain kind of delays as well. So, which are not in our hand at the end of the day. So, we don't see any delay from our end happening, if you understand what I'm saying. Yes.
Good to
Yes.
know, sir. Also, just to understand, like suppose there are two projects running parallelly. One is municipal infrastructure and the other is high voltage transmission. So how do strategize to prioritize one?
Sorry, ma'am, could you repeat the last part? I did not.
I want to understand how do you prioritize, suppose there is one municipal infra project going on and the other is high voltage transmission project.
So, ma'am, I think in terms of priority, I think I would say that all projects are prioritized equally, and we have dedicated a team managing all these timelines in terms of deliveries of the material and in terms of execution. So for execution, we have our own in-house team which handles almost 40 to 50% of our workload, and the remainder 60% approximately, or the remainder half portion of the work is being handled through subcontractors. So any project where we feel that our team cannot achieve the work, we hire subcontractors for the same. So there's a very good balance for that, where we have our own team so that no projects are basically hampered at the end of the day. In terms of other management...
Yes, sir, please go ahead.
No, so it was just about that. So in terms of physical execution, this is the way that we do monitor and ensure that no projects are delayed or there is no hindrance, or we basically do not need to prioritize any one project over the other because all clients are equally important to us. And secondly, in terms of material management, I think we have a very good system out here in our company where we do track all the material that is required on which date and orders are being placed in time. So priority of what material is required at what stage and looking to its lead time. All material is basically planned out. So certain items we only buy in the last month of the project and we place orders in the last month. Certain items we get in the last month, but we have to place orders in the first month of the project. So basically a good project management tools are being implemented out here to ensure that prioritization is being done, but not on a client-to-client basis, but just on a material or a service base.
Also, sir, just wanted to know any recent project which you delivered before the timelines?
So we just finished our project of Juniper Green Energy. I mean, the charging for the station has been done, and we are in the process of just finishing the punch points for this project. And this was done before timeline. So we had a timeline of around 9 months for this project, and we have finished it in somewhere between 8.5 months. Now this timeline is including all the delays from the customer end as well. So we have technically finished this project in 6 months only, if you consider the delays from the client end as well, in terms of design finalization. So this is one of the projects that we just recently commissioned in this quarter.
Currently, what I can see is we have around 55 CR, order inflow for this quarter. What visibility do you see for orders inflow in FY26?
So yes, certain portion of it will go in the FY26, certain portion will stay in FY25, is how we see it. Because like I said, there are certain government projects where delays will happen at the end of the day. So AMC particularly, we don't see any major delays in that. But from the current 55, I think around 60% of the orders will be executed in this year only. 60% value is how we would see it in that way. And the remainder of the order book would be coming from the other previous projects, as in the remainder revenue.
Sir, I'm a bit, new to the company. So for FY25, we did around 113 CR of revenue. So where I can see HEC in next 5 years?
I think this FY, I think we are planning to close somewhere around 175 on a conservative side, is what I have, I think, mentioned before as well. This is on a conservative side because, see, this is, at the end of the day, it is a capital intensive industry and we are dependent on bankers and other financial institutions to basically finance this journey for us as well. So we do have a lot of scope of negotiation as in terms of borrowing. And if this borrowing does increase, you will see good growth in what target I just mentioned. But this is the current target that we have on a conservative side. On a very conservative side where no funds are being increased from what we have since last year.
Fair enough. So good to know. That's it from my side. Thank you.
Thank
Okay.
you.
Thank you.
The next question is from the line of Aditi Roy, an individual investor. Please go ahead.
Hello, sir.
Hello, ma'am.
My question is, how are you positioning to benefit from the government 9 trillion capex roadmap for T&D and renewables?
Sorry, ma'am. Could you just repeat the last part?
Government's 9 trillion capex for T&D and renewables.
Ma'am, I'm sorry, I did not catch the question. You said government projects in transmission and distribution, T&D is what you said? And renewable space, is that the question?
In renewable sector.
So, in terms of private clients, we are getting, since last year, we are getting good flow of renewable clients as well, like Tata Power is one of them. The other one was Juniper Green, which I just talked about, that we finished the project for them, and we have just commissioned it for them. So the third one is Blue Pine. So these are some of the renewable players whom we are working for. So we hope for repeated business from all these clients as their more plants will be coming up, not just in Gujarat but pan India. And we are already in talks with them for new projects as well. So in terms of renewable space, we are currently working with more of private side rather than government side, is how I would put it up.
Okay, sir. And I have one question. What opportunities do you see under the green hydrogen mission, and how relevant is it your expertise?
So there are good players working currently, like Avada is working for green hydrogen and green ammonia projects, and certain other companies are also working. So we are keenly following this space since probably last 6 months, maybe a little more than that. So what we are seeing is that it is a very upcoming space, probably in the next 5, maybe next 10 years. So you might not see a lot of it happening, but we have already executed one green hydrogen project directly as an EPC contractor. So we basically are tracking this space, but not a lot of tenders are coming in on the government side. And on the private side also, there is not much demand in terms of setting up green hydrogen or green ammonia plants.
Okay, and sir, are you seeing more private sector opportunities in industrial electrification and renewables compared to earlier years?
I think in terms of renewable energy, the growth has been happening since I think 2012 or 14, and it has been a consistent growth year on year. And I think the same growth can be expected in the coming years also, because the government is very aggressive in getting the energy demand lower from fossil fuel based sources. So the aggression for renewable energy will always be there, at least for the next 10 years is how we see. And all policies would also governing the same space. Basically, more private players have come up because of these policies, and we see that because of this, we'll be having a better and good growing business in this sector because of the renewable, because of the spurt in this renewable energy growth at least for the next 5 to 10 years.
Okay, sir. That's it for my side. Thank you.
Okay, ma'am. Thank you.
Thank you. The next question is from the line of Kushal Kasliwal from Invade Research. Please go ahead.
Yeah, hi, sir. Thanks. This is actually my follow-up question. Sir, I was just wondering, seeing at our cap table, we have increased, the promoters have increased, your promoter stake in the company a couple of months back. So, given that there is a certain financial limit from banks, and given the kind of growth the sector is looking at, especially the T&D space, would you guys actively consider to do a preferential fundraise in the company to capture this increased growth in the market? Or would you just grow organically?
No, I mean, see, if we keep on growing organically, I think the numbers which have been speaking since the last, I think, 2 years, I think it would not be just to say that we can do a similar justice. Maybe we can do it for the next year, but after that we will have to, and we are looking for a preferential issue maybe in the coming future. That is going to happen maybe next year is how we are looking at it. Because like you said, this is a capital intensive industry, and currently we are majorly, most of our money is from the government, other than the initial IPO that we had raised. So government banks are basically funding us right now, as in debt-based funding is currently being focused on. Just to give you a small brief, so the collateral coverage in our industry is very important, and we are not completely tapped out this market that as to basically we have the ability to get more debt. We are currently at a collateral coverage of more than 50%, and the trend in our industry is somewhere around 25% is the lowest that the banks do go at. So the target is to basically maximize the debt ceiling first and then go for a preferential issue. And first to generate growth from the debt portion that can still be enhanced. And after that, maybe plan for a preferential issue. So that is how I hope that answers your question and gives you clarity as to how we plan on and our stand on the preferential issue is.
Understood. Fair enough, sir. Fair enough. Thanks.
Fair enough. Right. Yes. Okay.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand over the conference to Mr. Ganesh for closing comments. Thank you, and over to you, sir.
Thank you everyone for joining the conference call of HEC Infra Projects Limited. If you have any further queries, you can write us at research@kiranadvisors.com. Once again, thank you everyone for joining the conference.
Thank you. On behalf of Kiran Advisors Private Limited concludes this conference.